So this here is the inverted yield curve, right? Basically, it's the 10 years interest rate, which I think is sitting at like 4.5 or 4.7% or something like that. Maybe a bit lower. And you minus the 2 years, right? And basically the 2 year has a higher interest rate than the 10 year. So why would you buy a 10-year bond from the US government and your maturity is 10 years out for 4% when you can have maturity 2 years out for 5%? That's what this is showing, right? And in it, you'll see the 0% mark, right? That 0% is showing when the two yields come back into par. So for the 10 year, you're getting 4%. For the 2 year, you're getting 4%. And then when rates get cut, that's when the 2 year starts to fall dramatically, right? Because the Fed, and I use this very in massive air quotes because the Fed actually has no power. The Fed is a propaganda piece that hides the algorithm's moves. If you understand the algorithm, you can see it in this chart without a doubt. Without a fucking doubt. Right? But what they do is make people think that they have control. They affect people's spending habits. And when the consumer, which is 75% of America's GDP, right? When they stop spending money, their entire economy just seizes up, right? That's when the Fed cuts rates because something bad has happened. There's no reason to cut rates before something bad happens, right? Just when something bad happens, they will cut rates. They need to stimulate the economy again, right? So back here, stock market in March 2000. That's the start of the crash. Q2, right? Q1 consolidation, Q2 manipulation, Q3, Q4 distribution. Right. And then we finally recover when we have the good times, and then it leads down into the global financial crisis. And this is just a small, tiny little inversion. Right. .com bubble is a little bit bigger. This one back here, I don't actually remember off the top of my head what causes this, but this is the recession itself, right? This is when I think Iran did something with oil. Off the top of my head, it's been a while since I looked into this stuff. So Asian financial crisis sends us down a little bit, but this is basically it happens in Thailand and just brings all of Asia down. Really, it doesn't bring down the world. But the .com and the GFC are the big ones, right? Now the GFC doesn't kick off until we get to this point, right? And then eventually we recover and we have this massive stimulus package that just keeps on pumping money in, which is why you'll look at an inflation adjusted chart of the stock market, and we have never recovered from this, right? This is the, this is the utter peak of the stock market. And we have never, ever recovered from it. We're not even anywhere close to being back to the correct amount of wealth by investing. It's all lies, essentially. So what happens when you get a yield curve inversion this goddamn deep? If this was COVID, right? And if I bring up a chart of Fed fund rates, and I bring up a chart of the SPX, show you something else. So what happens during a recession is we get this massive run up in the Fed fund rate, right? And then they level out. See how the Fed fund rates levels out at like 6.5% or something like that? And it is not until they start cutting rates does the stock market actually crash. And the entire way down that they're cutting rates, the stock market crashes. It is after they cut rates, stocks crash. Come into 2008. We flatten out. Right there. We flatten out right there. We have this massive run up. All right. Everyone's like, woo! We're going to the moon. All-time highs. Yeah, baby, yeah. And then as soon as they start to cut rates, people start to get a little bit scared. Now we do take the high one more time because nothing is always the same, right? But there's the turtle soup. And this is where they really start to cut rates because something is really fucking broken. And that's what you get out of it. COVID. You will see a guy by the name of Paul Tudor Jones came out in September of 2019 talking on CNBC and saying that, oh, I think this thing about COVID, it's going to be a big thing. Well, him and his boys were loading up on one side of the bonds. It's complicated. Bond math is fucking retarded, to be quite honest. It hurts your head to think about it, but essentially they were getting ready for March because they know what's coming, right? Insider trading, whatever you want to call it. But you'll notice that in January of 19, they flattened out rates all the way up until July. But they kept the stock market alive. I knew about COVID here in December. I was ready for it. I knew about it in November. I was ready for it in December. And I was just waiting for the other shoe to drop, right? And it just kept on getting pushed back and pushed back. And then in March, when I'd worked out the COVID was a bunch of bullshit, right? Like it wasn't what they were saying it was. It was just a bad flu that will kill people over the age of 60, just like most flus. Right. Then they properly dropped the market by cutting rates. Then here, before I really understood all of this stuff, they start jacking rates up to an insane level that we haven't seen since 2006. Right. And jacking it up inside of Q4, which is reversal. We sweep the high and we fall down. But once they get to this point, they just start injecting trillions of dollars into the system. During March of 2023, the banking system collapsed, right? Worse than the global financial crisis. SVB was caught up in FTX and all the crypto stuff. And the FDIC will only insure people up to $250,000 in a bank account, right? All the banks have to pay into this every year. And it's the insurance fund for in case there is a banking collapse. Well, the government stepped in, and because it was a bunch of billionaires and millionaires and all that type of stuff, the government stepped in and backstopped the bank. Right? So the banking system that is completely insolvent and bankrupt at the moment, right? They are trading bonds that were 0.5%, 0.4% per year. And then when the yield of bonds goes up, the price of them goes down. So say they paid $500 for a bond down here. Once it gets up to here, it's only worth $100. Right? And so they're all insolvent because they have no balanced, haven't balanced their book, right? They have no money, essentially. But the government is backstopping them. They're going to backstop them until rates come down. And what happens when rates come down? They flatten out, they run up, they cut rates because something broke. We all know it's bullshit, right? Because this is just a smokescreen for the algorithm to do whatever it wants. And then the 2-year, the 2-year, the 2-year, 10-year will reinvert, I should say, causing, in my opinion, this low to be swept, this breaker to be hit this month, and then we start this. Now, when does the recession officially start? It might not start until here. I don't know. All I'm saying is that this being inverted causes recession. They slow rate cuts here. Couple of points, 100 basis points, 200 basis points. But this is when they really cut it. And that there is the COVID recession. Right? Then we go into the bull market. All this is a bull market. All this is a bull market. All this is a bull market. When you come out of it, that's when you go into the bear market. So up is bad, down is good, depending on how you look at it, right? Dixie on a yearly chart, quadrillion open, Q1's low, Q1's high. It could go up here. It could smash down here. And we have an epic bull run of all bull runs that send us to 300K on Bitcoin or whatever the fucking crazy number it goes to. But if Dixie does this, everything gets crushed. Right? Don't know until it happens. But that is a fair value gap right there. That is Q1's low. That is a rejection wick. This is the 10-year bond yield. This is World War I, relatively equal lows. These are the Circadian cycle. That is the 80-year quadrillion cycle. Oh, quarterly cycle, sorry, not quadrillion. Accumulation, manipulation, distribution, reversal. Yields want to come down. Yields want to go up. And if you compare it to the 2-year, you will see and we are sitting at 4.6 on the 2-year and 4.2 on the 10-year. So everyone wants to be on this instead of the 10-year. And then if they are buying 2-year treasuries at the moment, and they think that the Fed is going to cut rates, then they expect the yield to come down. So their $100 2-year bond, right, goes down in yield, like so, means the price has to go up. And if it comes down to here, then it might be worth $200 just for simple math, right? I don't know what the prices are, but that's how this works. Yields come down, price goes up. You cash out, you make money. People are betting on the economy crashing because for the Fed to cut rates, there's no reason to cut rates unless something's broken. The yield curve is saying that something is horribly broken. The SVB banking crisis, where the bailout costs the US taxpayer more money than the global financial crisis, right? The global financial crisis that crushed the stock market by 30 or 40% or something like that. What was it? It's 2019. Oh, I'm on the fucking 4-hour. That won't help me. Yeah. Crushed the market by 58%. And Bitcoin is just high beta to the stock market. It does decorrelate at times. Like if you look at it, here during FTX, during the FTX crash, you see how the stock market is already recovering, but the stock market has crashed here, right? This is the final leg for the stock market. And yet Bitcoin had FTX come after it. Now, if you look at the highs, you will see that Bitcoin tops out before the stock market, a month before the stock market. Here, it's doing its own thing, right? Falls, does its own thing. Down here with COVID, you will see that Bitcoin moves first. Right here. Takes a couple more weeks for the stock market to recover. During actually, let's go over to need the old data. During the 2017 crash, Bitcoin peaked before the stock market peaked by a month. There. During the 2018 rally, Bitcoin was the first to rally. During that was COVID, so but COVID, yeah, it recovers first. This one, yeah, it has its capitulation and recovery prior to it. and it doesn't really recover until this point. And then you have the massive run up during 2016. Bitcoin collapses back here, and it's recovering here, while the stock market takes a few months to catch up. Back here, has its washout moment there. While that's going on, stock market collapses there. So the point is, right, Bitcoin goes first, hits its peak first, collapses first, hits its bottoms first, recovers first, except for FTX. So does a all-time high in Bitcoin after we've had an entire, what, 14 months now? 15 months of non-stop bull run actually sound good to be going up here? It is possible, without a doubt. It is an election year, but it is also Q2, which means manipulation. 2000 was Q2. 2008 was Q2. Dixie is just consolidated for an entire year. And this might not happen for 6 months, 8 months. Shit, it might not even happen, man. But then you're dealing with a profile on Bitcoin that is X, and what happens in 2005? I don't know. Day is calling for some kind of shift in 2024. Halfway through, maybe. He hasn't talked about anything like this for a long time. I don't think he talked about it since early 2023 or something like that, maybe. But all I know is the halvings are bullshit, and Bitcoin has not gone through a recession, and the yield curve is saying recession, and the data that the Fed is putting out is all manipulated, right? They change the way that they do their measurements and all that type of stuff every single month to get the results that they want, which is not surprising because we know that red folder news events are all bullshit, and the algorithm is what is moving price. The narrative comes later. So I don't care about this run up because I care about what happens in these 2 years. Do I only get to position into Bitcoin here after a massive crash? Cool. That's fine with me. Do I never get to position into Bitcoin again because we're in some crazy XX profile? Cool. That's fine with me. All right. I just want to take the meat of the move. And for me, that's over in Forex, not crypto. But my point of all this is that it can trade all the way down here if the stock market was to crash from, say, up here, and it crashes 30%, right? Moderate 30% down to this low, doesn't hit COVID low, right? And say we're up here at this precision level, right? Then you're looking at 24K, right? Now, if this goes down to COVID, like it's bad, then you're looking at a 90% correction. Right? Let's put you down below 10K. So, is it a great idea to be buying above this high after this massive run up? Like, if you bought down here, cool. You're sitting pretty, man. But at the same time, are you taking profits up here? Most people don't, man. Like, I've been around crypto for a long time. I bought up into this bull run and I held it all the way through all this bullshit. Right? And then I experienced this bull run. And then I experienced this, and I sold in here, and all my boys rode it all the way down here. And you know who came back into the scene around about here? All those guys. And do you know what they're saying? All-time high, baby. We're going to the moon. I'm going to make so much money. When they were buying in here. And they rode this down. Now they are buying in here. Does Bitcoin do this? I don't know. But this is max pain. Everyone's back in it. Everyone's been a bull for like 6 months now. This is not max pain. There is no massive amounts of shorting liquidity up here or whatever it is that you think that the algo is coming to get. All the stops are here. Doesn't mean that they have to be taken. It just means that people who think max pain is this, I don't know what crack you're smoking, man. Because retail has come back to crypto. How do I know that? Because people are asking me about crypto. Just like they were asking me about crypto in here. Just like they were saying buy the dip in here. Just to go over the yield curve again. Yield curve inverts. September 2019. Keeps going up. Boom. Quote unquote recession, which it wasn't. It's just an excuse to do quantitative easing too, which is not something that you want to do on a supply constrained economy from the guy who wrote quantitative easing. He's just like, this will cause massive amounts of inflation. Guess what it did? It caused massive amounts of inflation, which is this run up. All right. Then you have this part. And then it verts here. And then March, early March happens right here. So this here is SVB's banking crisis. This is the government stepping in, stabilizing it. All right, another bull run. This is the yield curve on inverting, which is that crash there. This is it just consolidating, which is this bull run here. Go back to the GFC. It inverts here. All right. It uninverts. Final leg up. And this is the end of the party. .com bubble. Consolidating after the Asian financial crisis, kind of sends a little bit of problems throughout the world, but it isn't until the massive rally up during this consolidation, which is this here. Then we invert because something is terribly wrong. We have this massive run up, and then we have this massive uninversion, which creates this. And we don't have the oil shock, but if I go to SPX, whoops. Asian financial crisis did nothing to the stock market, as you can see. And then you have Black Monday, which there is no yield curve for it. And then you have this, right? So don't know why this is colored the wrong way, but whatever. Inverts. Massive rally up while it's consolidating essentially, and then as soon as yield curve goes parabolic, massive crash in the stock market. And it was a 20% correction in the space of what, July till November, so 5 months. That would be a 5-month downtrend in crypto of about 40%. And that's just from a oil shock from Iran, right? Middle East, Gulf War 1 or something like that, I think. If I turn on wars, yeah. So Gulf War, Desert Storm, which you probably have no fucking idea about. But if you chart historical events, you will notice that wars generally start in Q3, Q4, Q1, but you could basically call this Q4, like it happens, what, first month. Iraq, Russia, 2014, first time, Q4. Russia, Ukraine, this time. All right. Go all the way back to Vietnam, Korean War, World War II, World War I, Russian Civil War, and all major wars generally tend to finish during Q1. But this time is different, right? That this time, none of the historical data means anything. This time we just keep going up, right? Not Max Payne.